Welcome back to Real Estate. My name is Timothy from Ep12 Singapore. In this episode, we're going to look at the upgraders market and some of the hurdles upgraders may face this year. If you're thinking of selling a property and buying an investment unit, some of the questions I posed to our 3 industry experts might interest you. One common property investment approach touted by agents is the sell one, buy two approach. This generally calls on owners to sell an existing property at a significant profit and reallocate that capital into an investment asset and a replacement home. I asked Ray Teo, Associate Branch Director of PropNext Realty, to see if this investment tactic still holds water given today's market. A common investment strategy that was pitched to buyers and sellers about 2-3 years ago was this sell one, buy two approach. And given how launch prices have moved over the past few years and will likely set new benchmark prices, do you think this is still a realistic exit strategy?
The sell one, buy two strategy, I think not suitable for everyone. Okay, this is mainly for the underinvested population. Those people who have a property, maybe the property is fully paid, but they have no other investments. We rather call this strategy a restructuring. Because of the price right now, you're probably not so easy to engage on such investment strategy. You cannot overstretch yourself, okay? So there are things that you need to do to help you reduce this risk.
Do you think upgraders will continue to contribute significantly to the residential market this year? And what do you think is supporting this demand?
The first group, namely the new buyers. The new buyers, due to the pandemic, have been pushed to come and buy earlier. The second group of buyers will be the upgraders. Okay, the upgraders will still be the main backbone of the demand for residential properties. The third group is the ultra high net worth, or at least high net worth and above. Okay, they are more concerned about hedging. Okay, hedging their inflation. So there are a lot of foreign investors coming to Singapore to park their cash as well. So these are the main groups of people that is actually prompting the market to be so vibrant at the moment. Yeah.
In your opinion, do you think that it's become that much more difficult for Singaporeans to invest in the real estate market?
If you're talking about the residential real estate market, yes, it's getting more difficult because of the increase in additional buyer's stamp duty to 17%. You'll see a TDSR reduction to 55%, which means limiting your loans. Therefore, this will definitely have an impact on investment in residential properties. However, there are other forms of investment when it comes to real estates. A few forms. One, industrial. Second, commercial. Most of the industrial buildings surrounding this area, okay, every one of them, 95% profitable transaction. Only about 5 to 8% is non-profitable transactions. And that is because of owner not being prudent. If you are very prudent, these are alternative investment you can consider. The other things that you probably want to look at is commercial. Commercial got a few kinds. Retail, office. Okay. And commercial is the most unregulated one.
Okay, relative to the other segments.
Yes, so you can actually buy today, sell tomorrow. No tax, but you still have to pay buyer's stamp duty. All these segments are higher risk as compared to residential because the volume of purchase is confirmed lesser. Okay, the lesser the volume, the lesser the liquidity, therefore higher risk.
How can Singaporeans learn to manage their real estate investments prudently?
I think the first criteria you should look at cash flow. Okay, having a positive cash flow does really help lower your risk by a lot. Second ways to reduce your risk is, of course, to discipline yourself. Okay, your own personal cash flow also must be positive. Prudent way to do investment is to invest young.
What are key points home buyers who plan to upgrade this year should always keep in mind?
Home buyers who are searching for houses this year, you probably want to give the resale market a closer look. Okay, this market have a lot of hidden gems around. Second, you probably want to look for places with good location. It doesn't mean that you need to be nearer to the city. Okay, it means that you buy near amenities, buy near transport infrastructure, buy near good school. These factors will contribute to long-term capital appreciation of your properties. And third, okay, for this year, take a closer look at the landed property as well. Okay, if you can afford,
Those were some interesting points Ray has shared, and we're going to show you how to apply these to a real-life example. Recently, I embarked on my own housing journey when I purchased a resale 4-room HDB flat in Hougang with my wife. The HDB market was particularly hot last year, when many buyers were turned off by the long completion deadlines of some BTO projects. Today, we're going to sit down with my agent, Jay, and figure out what it would take for a new homeowner like me to upgrade in the future. So, thanks for speaking with me, Jay. You've handled many HDB and private transactions last year, and especially in the Sengkang Punggol area where you specialize. Why are there so many upgraders out in the market last year?
Thanks, Timothy, for having me here. We have a few reasons for selling. First of all is, of course, to maybe shift closer to their parents. Second is maybe to shift closer to their kids' school. And of course, the last group is probably to just cash out and upgrade to the private property, right? And if you look at the prices in Sengkang Punggol over the last maybe 10 to 15 years, it has increased quite a substantial amount, mainly because a lot of buyers nowadays, they are concerned about the decaying lease of the HDB flats and how it might actually affect the value of their property, right? Second thing is in terms of the renovation, they would rather choose to move in, possible, or minimal renovation. And in return, it caused a huge disparity between the older flats and the newer flats in Sengkang Punggol itself.
Is it true that it's only new, recently MOP'd flats that really have the best chance to reap the greatest profits?
Okay, in a way that is kind of true because a lot of these buyers, when they select their property, they would rather go for a newer one when they factor in the renovation cost. And such, even though these newer flats are asking at a higher price, these buyers are willing to pay a premium for these renovated flats. If you were to look at younger estates like Sengkang and Punggol itself, in the past 15 years itself, it has transformed tremendously from a totally new estate with nothing to where it is today. So I would say that in today's market, probably the cash proceeds that these owners are looking at would probably be around maybe about 150,000. If the market were to stay stagnant itself, what you're getting if you're a resale buyer is you're probably just getting a $70,000 discount from your flat. Whereas for a BTO buyer, right, they're actually getting the capital appreciation from the BTO flat itself. Yeah, because of the age of the property and the renovation, and people are willing to pay for a premium for that.
I see.
Yeah.
I see. In about 4 years' time, I'm gonna be ready to sell my flat. And if I want to realistically upgrade to a better property, how much would I have to sell my flat for in order to achieve that goal?
Okay, so first, let's break down the break-even price of your property, right? So you bought your property at 445,000. Okay, so let's say we were to factor in all the other costs like your stamp duty, which is 7,950. Okay, so you spend about approximately 80,000 on your renovation, right? Okay, 80K. And then in terms of your loan amount and your CPF accrued interest, probably that would be about, estimate, maybe about, let's say 40,000, okay, after 5 years. Okay, so if you were to add in all the numbers together, okay, that will be about 565,000. Okay, and let's just include things like your agent fee and your legal fees and as well, right? That would probably be about 580,000. Okay, which means to say that around 5 years later, you need to sell your place at 580,000 for you to even break even. Right, so if today you start paying for the flat and you are kind of saving up, thinking that, hey, 5 years later, after I sell my flat, I'm going to probably have a little bit of cash proceeds from it, right? Then you probably got to look at these numbers, yeah, to give you a better idea of how much do you actually need in order for you to upgrade, right? Yeah.
I think looking at this number, it really makes me think that I'll probably sit in my own property and enjoy it for an extended amount of time before I'm ready to start moving on. But
Yeah.
I think this is an interesting illustration of how we really need to break down the financial cost of upgrading when it comes at the right time. Maybe in the future, I might want to consider setting aside some of my capital into an investment property.
Yep.
When is a good time for me to start planning my finances in order to achieve this goal? And am I at a disadvantage compared to, let's say, BTO owners?
Okay, good question, right? Best time is of course today, right? To start as soon as possible to plan for your finances, right? And in terms of an investment property itself, right now, with let's say you're looking at the residential sector, if it's your second property, of course you have to pay the additional buyer stamp duty. So that might actually set some investors off in terms of the residential component, right? So some of you might instead be interested to look at commercial or industrial, right? But with that being said, for commercial and industrial properties itself, do bear in mind that you cannot use your CPF to finance for these properties, which means to say that your down payment has to be fully in cash. right? And to your second question on whether you are at a loss as compared to BTO homeowners, right? So let's just think about it this way. For BTO homeowners, they kind of waited 4 to 5 years for their construction period, and right now, with the delays, maybe 6 to 7 years, and they have to stay for another 5 years, right? So you're looking at 9 to 10 years, they are kind of exchanging their time for money, right? Yeah, so I wouldn't say that it is a loss for you, because after 5 years of staying in the HDB, you actually have the options to either sell your HDB or to actually buy another private property if you want to, right? So I would say that for your case itself, you have more flexibility and more options to do it with a shorter lock-in period. Yeah.
Well, my biggest takeaway from my conversation with Jay was to be financially prepared for the next stage of the housing journey. This is especially important amid expectations that key interest rates around the world are set to increase. I want to find out how mortgage brokers are advising their clients, especially those who plan to refinance their loans this year. Let's put these queries to Joanne Tan of Red Brick Mortgage Advisory. In December 2021, we saw the MAS introduce an advisory to Singaporeans that they should exercise prudence when it comes to taking out property loans for property purchases. Based on the data that you've seen, does this mean that we saw Singaporeans being more reckless last year?
I think what is interesting to note was for owner-occupied properties, there has been an increase over these 10 years. But for investment properties, there was a drop of 1.2 billion. This could be a result of the multiple cooling measures that was introduced since 2011 till date. Right, and this as a result has helped and encouraged Singaporeans to exercise prudency when it comes to property purchase here in Singapore.
Based on what I've heard from you, do you think the latest property cooling measures will have a lasting impact, and what would it be? And does this mean that investing in property is now more out of reach for Singaporeans?
So let us break down the latest cooling measure into two parts. The first one is the incremental of additional buyer stamp duty. This is targeted more for Singaporeans and PR that are looking to purchase their second and third property onwards. The other affected people will be the foreigners. They have to prepare a bigger capital outlay for them to purchase a residential property here in Singapore. The second cooling measure was the reduction of the total debt servicing ratio from 60% to 55%. So this means that one borrowing ability would be lesser now. Generally, what we are expecting to see is that people will still continue to buy, especially if they're first home. People will still continue to adopt the decoupling strategy so that the other party name could be free to purchase his or her first property. And then lastly, we are seeing more people turning towards non-residential properties such as industrial and commercial.
So based on what you've told me, many homeowners are still concerned that they will feel the pinch when interest rates eventually rise later this year. Do you think they should be prepared to fork out more for this eventuality?
Instead of looking at whether would the homeowners be forking out more, I would want to see it from how much they could have saved. So let me give you an example. If you were to look at 2-3 years ago, the pre-COVID period, interest rates on a housing loan could hover around 2%. If one were to refinance, say 6 months ago, they could be looking at a fixed rates of 1%. Right now, if they were to refinance, the fixed rates it will be at 1.45%. Early 2021, the Singapore government announced that for all banks to stop issuing SIBOR-linked mortgages, and even directed that by 2024, all SIBOR packages will be phased out. We have observed more of our clients they're more willing to move out of their SIBOR rates now to secure the relatively low fixed rates rather than waiting for 2024. Many of our clients also feedback their concern on the rising energy prices and on recent global events such as the Russia-Ukraine war. These could introduce more uncertainties into the economy. So they would rather choose security, and they would want to opt for the fixed rates and refinance right now.
What are the key financial considerations that homeowners and upgraders need to keep in mind, especially if they plan to upgrade or to buy a property this year?
The first one is on indicative check on the fair market value on the property you intend to purchase. So it's important for home buyers to check on what is the fair market value before they make an offer to avoid a huge cash over valuation scenario. The second one is on the rising interest rates environment. We need to plan and strategize to see which bank packages suits the homeowners accordingly. And lastly, on cash flow management, the question that we often get is, should you be taking a lesser loan, or should you be, taking a maximum of financing to leverage on the low interest rates environment right now? Generally, Singaporeans do not want to take up such a big debt, and they want to reduce the interest they pay. Instead of just doing the above two, one could also look into customizing and choosing the right bank's packages.
Joanne noted that international events and volatile markets are an area of concern for upgraders and homeowners this year. A common piece of advice I've heard during the making of this episode is that homeowners should plan their finances prudently before embarking on their upgrading journey. There are also alternative investment strategies upgraders can consider. Ep12 has a suite of research tools and calculators for your property financing related needs, including our Edge Fair Value tool. Our updated research page has all the information you might need, all in one place. Check them out on our website and mobile app now. Thanks for watching Real Estate. Real opinions, real statements.